Traders at UBA say investors are taking positions ahead of next week's T-bill auctions, where 263 billion naira will be on offer. Chuka Nwachukwu, head of Asset and Liability Management and Balance Sheet Management at UBA, joins us now for more on this story. Thank you so much for your time, Chuka. First of all, let's get your perspective on the dynamics that are likely to play out next week at that T-bill auction, because as you know, well over 700 billion naira has been withdrawn from the system this week for the settlement of that bond auction.
Okay, thank you, Wale. On the NTB auction for next week, we expect to see slight moderation in yield, or better still, they probably might just leave it as it is. There was over a 200 basis point drop at the last auction, which came out around at 2.24% from 4.8% levels the previous auction. So that obviously will impact the market. The market itself, like you mentioned, has been a bit tight, to be honest, and then we see that this pattern will probably play out next week.
All right, let's talk a bit about pre-election sentiment. As you know, we're just about a week to those general elections that kick off next week. But what's different this time compared to 4 years ago is that foreign investors don't seem to be very dynamic players in the market, at least over the last year or so. How does that influence, in your view, how trading activity is likely to play out? What type of activity can we expect from the local investors as they consider the elections?
Yeah, the election is just barely about 8 days away. The sentiment usually is for everybody to be on the fence and just watch what we play out. But if you talk about foreign investors, for a very long time, the foreign investors have not really played a great part in our market, and so that will not really affect the election. Will not really affect whatever activities that the foreign investors will do, because I mean, if you watch for the past 3 years or thereabout, the local market has been largely played by the guys and at the local market. So we don't really see much effect, in terms of the foreign investors. But again, for the local market itself and the local players, everybody will be cautious. People will just be on the fence and see what happens at the end of the day.
All right, let's talk a bit about the outlook for yields. Of course, clearly the elections are a consideration, but also inflation is another consideration for investors. I want to get your thoughts on how you think inflation could influence the direction of yields moving forward.
Yeah, if you look at the Nigerian market, you see that it has kind of like, has not really followed the usual, the normal economic dynamics, because you have inflation at 21.82 levels, and then yield at the local markets, especially the T-bills and the bond side, is at around 14% to 15-16 levels. So it will not really affect so much about the it will not really affect the youth so much, because again, another thing that we're looking at also is the fact that what the government is trying to do in the market. Government this year has said that they're going to borrow heavily, and specifically mentioned that it will come through the bond market. And so on the bond side, it will affect the bond largely, because government need to borrow, and then they will need to make the use attractive.
What about further tightening? We know the cash reserve ratio is a tool in the pocket of the central bank, and they tend to use it quite often when they need to withdraw liquidity from the market. But given what we saw with the January inflation number, and some are suggesting that even February we could see it tick up higher again, do you anticipate further tightening this year from the Monetary Policy Committee?
The CBN governor has said that as long as the inflation continues to go up, they will continue to tighten, and that's obviously what I think they will do. But now the percentage is what we probably people will debate about. You know, they might do maybe like 50 basis points or stick to the 100 basis points they have been maintaining. So for me, I think that the CBN will obviously evaluate it. They have a couple of weeks before the next MPC meeting, and so whatever happens at the election will largely play a great deal in terms of their decision at the next MPC meeting.
All right, let's talk a bit about the exchange rate, because again, you will expect that going into an election, the activities of foreign investors could influence what happens with the exchange rate. But as we mentioned earlier, foreign investors have been on the sideline for quite a while now. What are your thoughts on how the elections could be impacting the exchange rate? One view is that there could be some, especially within the context of this Naira redesign policy, there could be some demand for foreign currency that is linked to that policy.
I think that, if you look at the exchange rate and the depreciation of Naira, there's a lot of factors, not just the monetary policy activity, but again, we look at how much we are generating in terms of revenue as a country. Before now, we're generating around 2.3 million barrels per day. Today, we are doing less than 1.5%. So that obviously will play a great part, in terms of revenue generation. On the political scene, how will it affect the exchange rate? I think that for now, everybody should just be on the fence and watch what will play out. But I think that most of the candidates are bullish. In terms of, if you look at the economic policies that they rolled out and the economic agenda, so they are going to be, most of them are bullish. And so we expect that when the results, the election is over, whoever wins will do more bullish sentiment in terms of keeping the exchange rate within the moderate figure.